Hey, everybody. Welcome to Weekly Wednesday with Julie Hoffman. I am one of the founders of the Okanagan Real Estate Investment Group, and we are here tonight with Calvin Hexter from Edmonton, successful Edmonton realtor. So, everybody, give him a wave if you want. And we're just going, Calvin, thank you so much for being here. I know you're a really busy guy. The market is crazy, I know, in Edmonton, so I know this is very precious time for you. I appreciate it.
Yeah, I'm happy to be here anytime.
We all appreciate it. So he's going to be here tonight to answer our questions about Edmonton real estate investing. And he is a realtor. And one of the things that I like about him is he not only has a strong, successful realtor team, he specifically hires investor-focused realtors, and that's really hard to come by. So that's one of the many reasons I asked him to join us, and he graciously did. So, just some housekeeping before we get things started. I'm going to try to keep this under 60 minutes. Don't worry, everybody, anybody. This will be recorded and it'll be blasted out to whoever, decides to watch it through various platforms. And I'm sure, I hope Calvin puts it out to his platform too, platforms. And I'm just going to ask you to please keep yourselves muted unless you want to ask a question. And in which case, if you could please raise your hand, there should be a little toolbar at the bottom of your screen where you can hover over it, and there's usually a hand question. That's where you can raise your hand to ask questions. Because I want this to be dynamic. I want, whatever questions you have, hopefully we'll have enough time to get to them. And if for whatever reason if you're not comfortable, like asking the question in person, that's totally fine too. You could ask the question into the chat. Okay, so there's a couple of options there. If you want to ask it in person, I will unmute you. Sometimes that can take a half a second. So just keep that in mind. And like I said, sometimes you think you're unmuted and for whatever reason, your microphone doesn't work. So like I said, bear that in mind. Again, recording this, I'll try to keep it under 60 minutes. And we will also be including in here, Calvin's going to put his contact information, the best way for you to get in touch with him in the chat. So you can copy it tonight, put it to work immediately. We don't do too much processing production. I like to throw these videos out raw because that's faster and time is money. So let's just get this out there right away. And I have a bunch of questions that I have prepared. If nobody wants to start, then that's perfectly fine. But I want to give the audience the opportunity to start first. And if nobody does, then I've got some questions prepared. And sometimes that can just kind of get your mind, going like, oh, that reminds me, I did want to know this about Edmonton. So any other suggestions before we get started, Calvin?
Sounds good to me. I'm looking forward to it. It's gonna be a fun night.
Okay, awesome, fantastic. So before we dive into all the questions, I'd really like people to get to know you a bit. So I've seen some things online, and I'm going to share you some of the things I find interesting before you dive in. I've noticed that you were a bodybuilder. So, folks, and he's posted them, okay? So go on his profile page. That takes some serious commitment and discipline to be able to be a competitive bodybuilder. The other thing, which is totally probably out of left field, I notice you are renovating a house that looks to be around my age, maybe built in the 70s.
76 to
Right?
be exact. Yeah,
Sorry?
76 to be exact.
Oh, so it's
That's the
younger
year.
than me. Great.
Yeah,
It's fantastic. Okay.
yeah.
Um, Calvin is so smart because we built a house once and it had a big open beam, and he's got all these open beams. Instead, he built these, well, he's got a big open concept with like pitched walls, right? He made these lightweight beams, right? You just spray painted foam, basically. Is that what you did?
So they're called faux beams, and you stain them, and you can stain them any color that you want. And it took 4 coats for us to get the look that we're going for, but they naturally look imperfect,
Yeah.
like wood, and they are extremely lightweight, and they are much more affordable than putting full logs up on the ceiling on yeah on all over the ceiling. So
Oh my
we
gosh.
have it's a yeah we went very wabi sabi, a wabi sabi fusion with some modern elements to it.
Yeah, it was, I just thought that was so brilliant. Like what you did to make what looked like a kind of a plain but vast ceiling into something with those beautiful accents that would otherwise cost thousands and thousands and thousands of dollars and all kind of equipment and holy smokes, because we've installed a beam like a regular beam before. And
Yeah.
I just thought that was genius. So those have been a couple of my takeaways from you so far. But share with us what's your journey? How did you get into real estate investing? Where are you from? You clearly run a very tight ship and a very successful business. And share with us just some of the things that you've learned along the way.
Definitely. So I started in real estate back in 2013. That was my first investment property outside of my primary residence. And before that, I was doing everything that everyone else seemed to do to try and get ahead, whether it was stocks, mutual funds, the odd investment here and there. And none of them really provided the returns or the control that I wanted. And I found that it was either going to be a really long, slow road, or my money was going to get eaten up in a stock trade gone bad. And I didn't really like that. So one day I had a phone call from one of my best friends, and he told me that, Calvin, I went and bought my neighbor's house. And he was already living in a house, and he was the homeowner, and he bought his neighbor's house. And at that point, I was quite young, and I was thinking, is it like a weekend house? Is it for us on the weekend, and then you have your weekday house? And he's like, no, if I rent the house out, I can actually see $400 profit. And I'm like, tell me more. He's like, well, all expenses in, you know, $1,800 a month. I rent it out. I can make about 22, maybe 23, depending on when I rent it out. And I was like, not only that, but you also get the mortgage pay down, which you don't have to contribute to. Home prices. I know when my parents bought our home, when I was much younger, they bought it for like 75,000. And then when they sold it, it was worth, just under 400. And so I was like, and you get the appreciation, the mortgage pay down, and a little bit of cash flow. That makes more sense. And then 5 years later, I realized that there was tax benefits to owning real estate as well. And so I made a commitment that year that I was going to buy my first investment property, which I did. I overpaid for it. I ended up doing a BRRRR on that property without knowing what a BRRRR was or how to do a BRRRR. I overspent on everything. I bought everything that I would like versus what the tenants should be utilizing. And then I did another one the following year, and I kept on going for 5 years until I realized that I actually know a thing or two about real estate, and maybe I can help others with my license. And so in 2018, I decided to get my real estate license. I joined a investor focused real estate team, and then shortly, not long afterwards, I created Calvin Realty, and we've been focusing. I would say a good 50% on primary home and the other 50% on investment, both with local and out of province buyers, everything from residential to commercial. And I'm very happy to announce that we just won the 2025 Consumer Choice Award for the top real estate company in Northern Alberta. So out of like thousands and thousands, we got recognized for. So now we can have the badge everywhere, which I'm really excited to announce.
Congratulations. That's fantastic.
Yeah, thank you, thank
Christine is
you.
applauding like literally. I don't even know how to do that. That's fantastic. That's great. Wow.
Yeah.
So what do you think what are a couple of traits that you have or that you've developed over time that have helped you become a successful real estate investor?
Um, I would definitely say, reflection, reflecting on your projects, reflecting on what you did, and try and increase the net operating income, right? Looking at vulnerability within your property, looking at opportunity and trying to progress, not only by the tenants you select, but the properties that you renovate, the properties that you pick, creating rules and boundaries for yourself on what you're willing to work with, what you're not willing to work with. I think that's really important. Even in busy markets where maybe you're not winning multiple offers at the frequency that you desire, still staying rigid with your approach, making sure the numbers work. I think those are all tools in a recipe for long-term success when it comes to real estate investing.
Have you taken any kind of sales training, or are you just, would you say, naturally that way?
I don't see myself as a salesperson at all. I came from the fitness industry,
Okay.
so I wanted to try the bodybuilding thing. It was actually classic physique, but I was a regional manager for a Alberta health club for 12 years, and I got into personal training shortly after college due to my passion of just wanting to help people, wanting a dynamic industry to live in, to work in, and it was very like health conscious, and I just really appreciated that. I knew I wanted to be on this planet for a long time, and I'm like, why not focus on my own health and help others along the way? And so when it came to real estate, I realized that it really wasn't that much different. And instead of talking to clients about weight loss journeys and helping them get on that next football team, I'm helping clients achieve financial goals through investment real estate that really do make massive differences in their life, their ability to retire, their ability to see their kids grow up, their ability to improve their lifestyle, or even just that primary home buyer that needs to upsize or downsize, and then just giving them a little bit extra and going over and beyond to be able to give them that experience and what probably is the most expensive transaction that they might ever experience.
Yeah. Hmm. So, are you basically the Alex Hormozy of Alberta,
I don't think
Canada?
I can grow a mustache as good as he can. And I'd feel weird about wearing a muscle shirt everywhere or plaid. I don't look good in plaid, and the muscle shirt, I don't know if I could pull off. But he does a fantastic job, and he's
Yeah,
very
absolutely.
motivating and insightful. Yeah.
I think it's really interesting that you mentioned that that you worked at, I instantly went to him and I read all of his stuff and I have all his books, and he's definitely a salesperson. And I think sometimes people don't realize that they are salespeople. Um, it sounds like you don't identify as one. That said, it's service essentially.
Hmm.
So that's
Definitely.
rad. That's really cool. So,
Abs-
all right, I'm going to dive into some questions. What are some neighborhoods in Edmonton that offer the best investment opportunities for rental properties or long-term appreciation? What are your thoughts?
Okay, so when it comes to rental properties, we need to better understand what your expectations are for cash flow.
Mhm.
And if your expectations are very high for cash flow and you want the best returns, then I'd be looking at D communities. D communities might offer more of a challenging tenant base, can be slightly higher vacancy than the averages, but your returns will be much higher as well. With any risk when it comes to investment real estate, whether it's residential or commercial, expect higher returns to come along with it as part of that risk. And so if your goals are the highest returns, we'd be looking at D areas. If you're looking for, what's a good steady eddy property that can see some good appreciation, I'd park you next to infrastructure that is in the process or soon to be completed. So once it's completed and it creates a larger demand for that area, then naturally there's only so much supply in a certain area. Once the demand goes up, property value tends to go up, within the year afterwards. And that's how you can maybe outpace the rest of Edmonton in the appreciation. And lately, we have been seeing fantastic appreciation. I mean, in some assets, we're seeing a 16% increase in comparison to last year,
Mhm.
which is unheard of for Edmonton. And the bigger cities are taking a little bit more of a hit on their, certain asset classes. But, communities that I would really keep an eye open on, West Edmonton has been really popular. It's, classified between a C and a B community, depending on the actual neighborhood you're looking in. Common neighborhoods like West Jasper, Grosvenor, North Glenora, these are all fantastic. You buy a property there, it shouldn't be hard to tenant. Our vacancy rate now in Edmonton it actually got clocked in lower than Calgary, and our property prices are more affordable. So a ton of Calgary investors have been focusing on putting their capital into our market as well. But yeah, the West Edmonton would be a good start because again, it's a good balance, and we also have the West Valley Line LRT that's coming through.
Mhm.
And when that's completed, as long as you're not too close, not too far, 400 to maybe 1,200 meters from a stop, not from the line, you might be posed for some strong appreciation in the future. Those would be some really good communities.
Can you walk people through, and just assume everybody's a newbie and they don't know what anything means, the the A, B, C, D term
Yeah.
that you're talking about?
Yeah, so with any city, they can be classified as A, B, C, D neighborhoods or areas, and that really reflects the desirability to live in those neighborhoods. What's the demand? And usually, when there's a higher demand, there's a higher price. So you can think of, some of the areas in like West Kelowna that might be a little bit more expensive, or certain areas around the Okanagan that might be considered an A, and then you probably have B, which aren't quite A's, but they're still very expensive and a great place to live. And then you have C, which is a little bit more probably like middle class, maybe a little bit more rental heavy. And then you have the D areas, which are the most affordable areas, probably the least desirable for now. Many of those areas can gentrify depending on the infrastructure that's being developed. But some of those most affordable areas can offer you the best returns. And so when we use the classification of A, B, C, D, I like it because you can have reference to any city and you already have a good idea of what we're referring to. And so we have maps where we draw out you know, all the different areas from a macro perspective to understand, this is an A area. So what does an A area say? It's probably one of the most desirable communities, one of them, most expensive.
Mhm.
These areas tend to not cash flow, right? These areas have the lowest vacancy, the largest selection of tenant profile. They tend to be very steady in market trends. So if we're seeing like expansion or contraction markets, they tend to do consistently with property value. And then you have the B areas that are very desirable still, not as desirable, a little more affordable. Some of them can be cash flow positive if you have numerous leases per property. Most of them won't cash flow if it's one lease per property. So you're either looking at having a suite or two suites in the home, which will allow you to cash flow, or converting it to an Airbnb model. The short-term rentals can do really well in the B areas. They'll offer a higher gross revenue and offset with your expenses. You should be positive. And then we have the C areas that tend to be a little bit more affordable, still somewhat desirable, in decent areas. They capture a good tenant profile. Vacancy is very average. Again, we got clocked in at 3.2 on average, which is pretty good. Um, and it just provides a good steady investment. My favorite investments that I've ever had have always been key on location first. So they weren't necessarily like a driver. They weren't the heaviest cash flow property, but they were always in a location that I was proud of, that I was happy to drive by, that it was easy to tenant no matter what time of year that it was. And I've always really appreciated that. So I think if you're investing for the short term for cash flow, I think dabble in the D areas. I mean D, C areas. I think if you're going like steady long term, I do recommend the B areas or maybe a mixture between the C and B. Just my recommendations, but it's most important to understand what goals are most important to you, right? We have a lot of investors in the big cities that are like, I don't need to cash flow. I just need to break even. And so what we do is we do a little bit of a stress test and say, okay, so what if utilities went up? What if interest rates went back up to 6.5%? Would you still be cash flowing? And we want to find an asset that would kind of live past the stress test. You're not living to pay off the imbalance of, the negative net operating income at the end of the month, at the end of the year. Um, so, it's everybody's goal is a little bit different. So it's just important to understand what your primary goals are. And then you're investing in the right locations that help support. And that's really the difference between an investor focused agent team or not, is instead of just finding a property because it has a legal suite in it and then hoping that you're going to get phone calls once you have a rental advertisement up, that's really rolling the dice. And you might not be proud of that property. You may not be happy with that property. And the vacancy might just kill that potential cash flow that did look so good on that pro forma, but no investment realtor or individual was there to show you your blind spot. And so I think it's really important to get a good perspective of what you're getting. Start with location first. Understand how does it affect appreciation, cash flow, tenant profile, and vacancy. Once you have those metrics, then you can look into the property itself. Is this property going to be a more desirable or least desirable? Is it superior or inferior to the other rentals? Go on Rent Faster, go on Rent Board, see what's being advertised. Is yours a 3 bedroom and the rest are 2 bedrooms? Maybe that offers you a competitive edge. Do you have a triple car garage and everybody else has a double? Look at the things that might set you apart, because if the rental market does ever take a turn, we want to make sure that you're tenanted, because cash flow is great when cash flow is great. But what happens when the rental market does get turned upside down, right? You want to be able to withstand that. And also your exit to sell is going to be easier with a better performing asset, right? Really, the property value is really hinged on the amount of income that it can make. So let's find properties that are consistent, that can outlast, these different markets, because you don't have control of interest rates, utilities. You don't have control on the tariffs as much as you think that as much as we want to tell, Trump to F off sometimes, whatever it is, right? So that's my belief in it, but it's really just having the right discovery questions with any investor that we're working with, whether you're brand new or experienced, to be able to help educate you on what we're seeing and maybe offer some good insight that'll help you see results both short and long term.
Mhm. Do you have, I didn't prepare you for this question, but do you have uh, someplace people can go to get like your team's opinion on A, B, C, D
Yeah, just reach out
areas?
to us and we can send you some details, set up a meeting
Yeah.
even, and then go through the map of Edmonton
Mhm.
and then walk you through what's happening.
Mhm.
The one positive thing, I mean, the city of Edmonton is growing fast. Like migration, we've seen records last year.
Mhm.
Even, looking at the rest of like the net migration, there's a lot of out of province, Canadians that are coming back to Alberta. There's a lot of, out of province individuals, families that are coming to Alberta for their first time because the affordability, I think on the scale of affordability, we're one of the best cities in Canada. But did you know we're also like, I think one of the top cities for earning potential as
Mhm.
well? So like that combination of those two is a very powerful, it's very, very powerful.
So walk us through some of the reasons, if you could, please, why it's such a good economic, why it's so good economically when it comes to people being able to earn a lot of money, basically.
Yeah, I mean, our GDP, I can't remember the percent that we're at right now, but we are heavily weighted on we're heavily weighted on oil and gas.
Mhm.
So, we're not as much as Calgary, but there's a lot of, jobs that come along with it, with oil and gas. I think we're over 50%. And we're also heavy on like government jobs in Edmonton, manufacturing plants. I think a lot of tech startups we're
Mhm.
seeing right now too. There's, it's easy to invest in Alberta. And I think that's why, Mr. Wonderful from the Shark Tank is also, establishing like the largest, this energy plant in Alberta as well, because, you know, the biggest difference is the government wants you to live here. They want to make it easy, not only when it comes to the landlord tenant rules, which tend to be a lot more favorable in Alberta for landlords versus tenants, but also no PST, no land transfer tax. When it comes to like the zoning, it's a lot easier to invest here. And so it just makes sense in that sense. I don't think our property prices will ever match Calgary. I think due to Calgary's geographical location, like near the mountains, with the accessibility, I think they're always going to be priced higher. Edmonton's not that much farther, but I always think we're going to be the more affordable city. We always tend to beat them when it comes to cash flow, as well, which I really appreciate. So been really lucky. And I think a lot of Edmontonians don't actually realize how good we have it and how much of a hot topic Edmonton is Canada wide when it comes to investing.
Have you, do you know what the, sorry, it must be a seller's market, right?
Mhm.
Do you know how many like months of inventory there is right
Just
now?
over two, just over 2 months.
Over two. Oh, that's so fun if you own
Yeah.
property. Now it's not so fun if you're trying to buy. So what kind of mistakes have you seen, let's say, out of province investors make that maybe folks could benefit from? I'd say most of the people that'll watch this are from BC and Alberta. And I know so many people have their eye on my, in my community on Alberta, specifically Edmonton. So, have you seen some trends maybe that people can avoid having happen?
Yeah, I think from out of if you're out of the city and you're not familiar with like the locations, it's either buying in a location you're not familiar with that may not meet your investment goals. I would say that's probably one of the most popular. I would say that's the number one. I would say number two is buying an asset that doesn't make any sense in this respect to numbers. So maybe buying an off-market deal with comps that are like they're what they call false comps. They're not like accurate comps. So, I still remember a story, 2 years ago where I got called by a real estate coach and they asked me, "Hey, Calvin, our clients bought a property from, off market. They were told that, once they renovate the home, the after repair value is going to be, X amount. And they've been trying to sell for 6 months and they haven't been able to. We need your help and we need you to go in there." So I went and viewed the property. Renovations weren't really done at a good quality, but the comps that they were using weren't anywhere close to what this property's potential could be. And so I had to give them the terrible news that, hey, you guys are shooting for like $100,000 higher than what the elasticity of this property will actually allow.
Yeah.
And and not only that, like the renovations that were completed were really guided well. They didn't really have a good professional partner team that were looking out for their best interests. And I would say that's probably number three. So number one, I would say location doesn't fit your goals. Number two is buying an asset that doesn't make sense when it comes to the returns that you're looking for, whether it's a fix and flip, a burr, or even just a buy and hold. And then I would say number three is not having a professional partner team to help support you throughout this. And we can offer, numerous professional partners in all different areas of real estate to help support and almost make it easier to invest here than it would be in your own backyard.
Mhm.
Um, I know that trades in big cities right now are not easy to get reliable, loyal trades that will finish the job at high quality. Here we don't really have that issue, but you still got to vet for quality.
Mhm.
Um, and so I would say those are my top three of the biggest mistakes that people will make when investing outside your backyard in any city, really.
Yeah, that makes a lot of sense. I'm hogging all of the questions. If anybody has one, all you got to do is raise your hand, guys and gals. All right, I'm going to keep going. But if you think of anything, don't be shy. Don't be shy, everybody. Calvin won't bite. Promise, right, Calvin?
I promise.
Okay. What types of properties, single family homes, condos, multifamily, in your opinion, offer the best returns in Edmonton right now?
I'm gonna say it's more on like location, but I would say, what are we seeing the best returns on right now? Suited duplexes have always been a consistent performer.
Mhm.
So, I mean, naturally, if a property is suited with an in-law suite and not legal, that will outperform a legally suited home just because of value, and rents are pretty consistent. But having the legal badge to it offers a little bit more confidence that the city's not going to come in and shut you down, which can and could happen. Um, but I would say like, suited duplexes can do really, really well. The units in any multi-complexes where you have direct access to the unit itself and no common area tend
Mhm.
to yield higher rents, which is great. And so with our duplexes, they offer typically exactly that. You can walk through the front door, go straight into the main level, go through the side entrance, access direct basement. And, the rents are higher now than I've ever seen them ever. They're considerably higher than what they were in the past. And so with interest rates dropping, property value is going up, not at the same pace that, quarter one's not as intense as it was in like quarter two or quarter three last year. And it was starting to soften a little bit in quarter four. It just wasn't as crazy. So I still think that we're reasonable right now. And I do think we're going to be seeing a lot of appreciation going into 2025.
Mhm.
So right now it's kind of a perfect storm, expenses are lowering, income's increasing. So it's putting us in a really good position. And I mean, there was a good year and a half there where it's like, is Edmonton really known for cash flow consistency? Because there was a year and a half where we really didn't see great numbers. Utility costs were up, interest rates were like 7.5%, 8%, and there was a lot of properties that weren't cash flowing. So if you can find more units under one roof, not only does it offer you a higher percentage for larger earnings and return on investment, but it also offers you more consistency and your ability not to have to, subsidize the expenses yourself because you're going to have other tenants that will do it for you. For example, if you had a single family detached home or a townhouse or a condo and you had a vacancy, you're the one that's going to be responsible for all expenses during that vacancy time. So say a tenant leaves in November and it's in a bad area and you just can't tenant it November, December, January, February, you have 4 months that you're paying the expenses on, coming out of your savings, and then you're finally able to tenant. I mean, are you going to see much for cash flow over the next 2, 3 years after you factor in the 4 months of vacancy? Probably not. And so having the ability where you have maybe, two, three, four tenants, you have one vacancy, it really doesn't hit you as hard,
Mhm.
right?
You mentioned Airbnb, and everybody, I gave Calvin a bunch of questions in advance so that I wasn't completely blindsiding him, although he totally knows his stuff. That said, I want to ask you, are there any talks about Airbnb problems in Edmonton? We had a lot of that happen and some major legislation come down that uh, really impacted a lot of investors. So are you able to speak to what you see on the horizon for that?
I haven't heard a single thing in respect to any changes within the Airbnb network that might create more of a challenge in our city. I haven't heard of a single thing. So maybe I'm completely ignorant to what might be coming, but I haven't heard of a single thing. And I usually hear about this stuff, like grumblings.
Mhm.
So as far as I know, we're
You're good to
still in
go.
motion. We
Okay.
are in, and I'm listing two Airbnbs right now. We have one that's in the north central Edmonton, and it's 3 units. They rent out the basement as an Airbnb, the main floor is Airbnb, and the second floor is Airbnb. And I think they hit just shy of 60,000 gross annually. And then I have another one in a brand new area of Rosenthal. So it was a 2018 build and they rent out the main floor and the basement as Airbnb, and they're listed right now. And I haven't seen any challenges or anything with either. One of them's legal, the other one's not.
Okay. Well, that's good to hear because that can sometimes be people's strategy. And even if it's not their original strategy, it can sometimes be a backup strategy, in case they need it. So that's really, really good to know. Um, what are you seeing? What kind of trends are you seeing in Edmonton? Such as like, is there a lot of development going on? How are they able to handle all of these people that are moving in?
Yeah, so the city planners want to play well with the investors because they want to be able to open up the gates for the population, but they have to make it easy on the investors and they want the investors to want to invest. And so the city of Edmonton, about I think it was January last year, changed the rules to the zoning, and they offered a lot more density within the lots of Edmonton, meaning that you can develop a lot more units on the same parcel of land than what you could do the year prior. And it really opened up the landscape of what you could build. There's a lot of creativity of what you could build. And now we're seeing a ton of development that's happening on these lots in Edmonton. And we see these builders that are densifying these lots as much as they possibly can. We're seeing these inside lots that are getting fourplexes built on them with legal basement suites. So 8 units on an inside lot. And lots themselves have grown so much in value. Like it's wild on how much these lots are selling for as long as they have the size. I mean, we always knew that the appreciation came from the lot and not from the dwelling because the dwelling itself is a depreciating asset. But I don't think most investors really knew how much the land really meant to the value until we saw this. And over the last year and a half, lots have just been a massive demand. So what we're seeing in the neighborhoods when you drive through a lot of them, especially those neighborhoods that were built in like the 50s, 60s, 70s, is a lot of infill projects where it's not just these older bungalows, but now you're seeing these two-story developments that are side by side, these fourplexes, duplexes, triplexes, garage suites, just a lot more density. And now it does change the city landscape quite a bit, but it also offers an opportunity to get young families back in the city core and creating these, 10-minute cities where, you have everything within your reach within 10 minutes. And what was happening before is we weren't seeing these infill projects come at the pace that the city was hoping, and they had to change the rules to really allow it. And then that coupled with the MLI Select program offering you massive leverage, which I've never seen that much leverage before. Doesn't necessarily mean you're going to get amazing cash flow, but it does give you amazing leverage. It's kind of opening up the floodgates to all these developers. And, there's schools and businesses in the city core that were suffering because these young families were deciding to live on the outskirts of the city where we tend to see sprawling occur versus the inner city development. And now that the development is there, these families are moving in these communities that have been around for a long time, the 60s, 70s, and these schools are opening up again. These businesses are opening up again that were once closed, and there's life that's now put inside the city. Whereas naturally, if you don't allow that, all of the new families are going to live in the new developments on the outskirts,
Mhm.
right? And so it's really cool to see how things are changing and how there's more life built into these communities that we've, grown to love over the years.
Mhm. Um, Going back to your burr, what were some lessons that you learned when in your first property? It was like an accidental burr. That's what it sounds like.
Accidental burn. Yeah.
Okay.
So naturally, whenever you look at doing a burr, there's two thoughts in mind. There's two stages to a burr, if you want to break it down.
Oh,
The
and
first,
maybe do you mind with for the audience going through the B and the all the R's and what they
yeah.
mean? Thanks.
Yeah, so the burr strategy, the purpose of the burr strategy is to flip the property, but instead of you flipping it to someone else to sell it, you're flipping it to yourself and going through what's called a refinance. And so when you're doing the burr method, the whole goal is to be able to improve the value of a property, create enough equity where the bank's able to loan you, more money through a HELOC or whatever, remortgaging that you want to do. And then you have the ability to pull out that additional equity in the form of a loan, and then you can reposition it into a new asset or an investment if you so choose. So it allows you to create some more momentum when it comes to your investment goals. So the BRRRR strategy stands for buy, renovate, rent, repeat, and I missed
You missed
one of them.
refinance,
Redo,
and that's okay.
refinance, refinance. Yeah,
No.
I haven't actually talked about the BRRRR strategy in a long time,
Yeah.
but there's two parts to it. And the burst strategy, the two parts would be A, am I renovating a home that I can rent out afterwards? So, like, what's the long term goal of this property? And am I renovating it not only to hit the refinance numbers, but am I going to renovate it to actually have tenants want to live there? Am I going to renovate it to get the class of tenants that I want, right? Because how the property presents itself will attract certain demographic. Are you attracting professionals, families, right? So that's one thing that a lot of people forget about. They just so focus on the numbers, and then they're left with this asset that, yeah, they refinanced, but they don't like the people that are knocking on their door trying to rent it, right? and it was their own fault because they didn't look at it in two stages.
Mhm.
So that's the first stage is the rentability, that you can get from it. And then the second one, obviously, is to know your numbers. Whenever you're looking at a burst strategies, you should naturally have what that North Star looks like and what that ARV potential is, right? Take a look at this property that's probably in this maintenance deficit, requires renovation. And if you
So,
were to,
sorry to interrupt again, but ARV, can you walk through ARV?
yeah.
We're like
So
a couple of
ARV is,
scientists talking about
yeah, of
chromosomes.
course. So
Okay,
ARV is after repair value.
thank you.
So think of it this way. If you had an old car and you're like, should I update and restore this old car? Well, you'd probably go on, some auctions and see, well, if I were to restore this old car, what could I get for it? Well, I see that this car that just sold, they have new seats, they have a new hood, they have new tires, and it looks like they just sold that car that was restored for $20,000. Now, I could buy this old car that's sitting in this lot for 4,000, and if I add all my math up, it's probably going to cost me 20,000. So in the end, I'll be in it for about 24, and it looks like they sold it for 20. So does this asset make sense? Probably not. So you do something very, very similar when it comes to purchasing a property, except you're not selling the property, you're refinancing, and know that the bank doesn't give you full loan to value at 100%. Typically, it'll be 75 to 80% loan to value. And they do charge you when you take that money out. So the second part is to be able to understand what's the elasticity and value that that property can offer you, right? Locations will offer certain elasticity and value, right? How much can a certain location get, right? Think of a location like a C location in Kelowna, and can you get a $2 million property, a $3 million property if you're to do a renovation there? I don't know. You might be limited on how much money you can renovate a property to get, even if you put gold taps and gold fixtures and platinum everything and heated driveways, there's going to be a limit of what you can sell that property for in that location. So look at the limiting factors in the location, look at the limiting factors of that asset. What's the size of it? What's the style of home, right? Bungalow, two-story, four-level split, three-level split,
but it's
split
not
level,
going to
bi-level.
allowing
They're
things to
all,
happen or struggling against the current. When you're relaxed, when you're trusting, when you're expecting great things to happen.
I love it.
I think
Um,
somebody's on two seminars.
um, Yeah, so it's important to be able to see what the potential of that property can be by comparing it to other properties. So that would be the second part, is look at, what kind of tenants are you going to be advertising to that you want to reach through the renovation, and what is the potential of that property and what could it be? And and if the numbers make sense, then I would say go forward with the purchase. And if the numbers don't make sense, then I think you either need to renegotiate a better price that makes sense, or you're moving on to you're continuing your search. And so when I started my BRRRR, I had no idea. I didn't know what that meant. I didn't know any of that stuff. I just bought the property because I thought it was a nice looking property. I tore the complete main floor out, the basement out. I didn't have to do that. I overspent on the renovations. I completed the main floor. I didn't tenant it until the basement was done. I mean, in a smart BRRRR, you can tenant the floor that's done, offer an incentive on rent. So at least you're subsidizing some of the expenses. And then you can go ahead and tenant the basement and even advertise for tenants even before you're completed, right? And show them what you're going to do. Most tenants are completely fine with that.
Mhm. So, did you spend way too much money on beams for your ceiling in that burr?
No, that one already had a vaulted ceiling with a beam right down the middle of it, so I didn't have to. We just painted it to make it look nice.
You're good. Okay.
Yeah.
All right, yeah, guys and gals, I'm asking all the questions. I'm not seeing
I think
any
you're doing too good
hands.
with the question asking, Julie. I think you're taking the questions from everybody else.
Oh, okay. I'm just doing my job too well. Okay.
Yeah.
Okay. Um, Fantastic. I think I've gone through everything. Was there anything? Oh, seasonality. Yeah. 2 months of inventory means we are in a seller's market in Edmonton. So have you noticed a slowdown? I think you kind of touched on it, but I think it went in one ear and out the other. But what are you seeing as far as, well, when's a good time to buy? Even in a seller's market? Is there a better time than others that you would say?
I think there's pros and cons to the time that you buy in any market. I think when you're buying in a market like, in most Canadian markets, in the end of quarter 4 or the beginning of quarter 1, you're going to see less primary home buyers, so less competition with other individuals, but more competition maybe with investors,
Mm.
and a little bit less inventory. So you might be able to accomplish better pricing in like December, January, February than you would in the warmer months typically, just because there's less demand that's out there. Now, a lot of primary home buyers start to stick their head out right about now.
Yeah.
And so the investors are going to have a lot more competition, but sellers are also preparing themselves because it's the famous spring market. So you might have more inventory, but really how much demand is coming out? And if there's more demand than there is supply, then naturally our inventory is going to get decreased and it'll be an even greater seller's market, more competition. And it's your ability to either find properties first, find off-market properties that make sense, or look at properties that have been sitting on the market that have just been kind of forgotten about, because there's still lots of properties that are sitting 30 days on market, 40 days, 50, 60. Sellers are probably thinking, why aren't my properties selling? The news is saying that everything's selling. They're saying that there's no inventory, but my property has been on sale and it's been advertised and I've had this lawn side out front for 2 months now. What's wrong? What's wrong with mine? So a lot of these sellers, even though they don't drop their price advertised, a lot of them are willing to accept a much lower price. And a lot of people don't realize that.
Mm.
I have a lot of sellers that I represent that are not willing to budge on the advertised price, but they're willing to budge a lot more when it comes to the offer price. And you'll never know unless you actually offer on that property. There's no other way of knowing unless you actually offer on that property to understand the motivation of that seller. So I think when everybody else is looking at like 0 to 5 days on market, I think you as an investor should be looking at 30 plus days on market and offering hope, offering a solution to those other sellers that might be, you know, stuck on the fact that, their ego's holding them to that number, you know, because that's the way it is in many cases. And I wish with many of my listings that I had just somebody that just offered me a price, right?
Yeah, I think that might be one of the best suggestions you've given. And there have been a lot. It's hard to pick.
Oh, I got lots of
But I'm
tips. Yeah,
telling you,
yeah. I'm
like,
just waiting for your questions to lead me to those directions. Yeah. Um,
but make
we
an
got a
offer,
question.
guys. Like on something that's been listed a while, they might take it.
Mhm.
Right? You might be like, there's no way they're going to take it. And then they take it. And it's like,
Yeah.
it's a miracle, right?
Hmm.
Yeah.
Yeah. I think
Happens.
especially in markets like this, where again, look at the news. There's no properties available. Everything's selling. What
Mhm.
about the sellers that are like watching the news and like, honey, why isn't our house selling?
Yeah.
Alan has a question. You said the
Yeah.
city could shut down a non-legal suite. What do I mean by shut down? So if you're renting a suite out that's deemed non-legal, they can go in and they can warn you, and they can warn you by getting your property up to legal standards. And if you don't, they will fine you, and they'll usually ask that you remove the door that accesses that suite as well as the stove, because those tend to be the two items that they can take away and now makes that suite a little bit more awkward. But they can shut you down and they can fine you. And normally, how do non-legal suites get known? Usually neighbors or pissed off previous tenants. 90% of the suites that I've seen in Edmonton aren't legal because it's just very time consuming. The permitting process, it can be, very expensive.
Mhm.
Having a legal suite versus a non-legal suite, maybe 40, $50,000 extra in cost, maybe 60,000 in this market, right? So it can be considerably more expensive. And when an owner knows that that $60,000 they have to spend to legalize it won't get them $60,000 back in added rental income, some of them are like, what's the point?
Yeah.
Right? And they're willing to take that risk. But I mean, that's really up to you to decide.
Yeah. Aren't, and correct me if I'm wrong, but I think there's also some ramifications insurance wise, should anything happen, like a fire.
I've been asked that a lot. To this date, I haven't seen or heard of anything that comes out negative as long as you just let the insurance company know. Um, but I personally haven't seen, unless anything's changed. But still make sure you're doing your own due diligence. Don't use this video as any indication of like not doing due diligence in any way, shape, or form. Always still do it. Ask lots of questions. Still ask your insurance provider what kind of negative, impact does this have on X, Y, and Z. It's really the blind spots that can bite us financially that we don't, that we can get hit with. And so asking the most questions, having a professional partner team that get that flashlight out to look at your, blind spots is very important. And that team's there to help support you for that too. So you're not in it alone.
Yeah, and some people like to do their, liability statements at the beginning of the webinar. I prefer to do them at the end, not because I forgot to do it, right?
Of
But
course. Of
this is
course.
all of this information is Calvin's opinion. He is a licensed professional real estate agent and also a real estate investor. But again, take everything as his opinion, and by all means, get your own independent advice. Okay, awesome. That was a great question, Alan. Thank you. Anyone else? Anything else you want to add before we hop off? Our
Yeah.
timing
I
is
mean,
pretty darn good here.
we have an investor list. So I do think that, if you are considering purchasing in the market, it's having the greatest volume of options available. It's like if you were to go to the grocery store, you want to have your options, right? And so we have what's called an investor list that we send out deals. We hand select deals. And so if you ever want to see hand selected deals, feel free, go into our website, go to the investors section. There's lots of good material there, and you can sign up for that. You'll see everything from creative financing deals to fix and flips to BRRRRs to buy and hold to a lot of MLI select deals too. So lots of fun stuff, and hopefully we get a chance to say hi. Hopefully you get a chance to say hi, and I can say hi back, and maybe we can do this again sometime.
Yeah, I really hope so too. This was very insightful. Thank you so much for your time. Folks, I've put into the chat the website that Calvin provided for us. If you're listening to this recording, it's somewhere around here. So just poke around. And if you can't find it for whatever reason, then you just reach out to me. I'll make sure that you and Calvin get connected. So thanks again, Calvin. You are awesome. I really want to highlight that you have provided so much free information with no expectation, and that's just the quality that I and I know everybody here and everybody that's going to listen to this recording truly appreciates. So thank you for being so generous with your time and your opinion and advice on things.
You have a wonderful community. I'm happy to speak to all of them. And Julie, you're a fantastic host, and thank you so much for having me.
My pleasure. Okay, guys. So we'll see you on the next weekly Wednesday. Thanks for all of you who showed up. Fantastic souls. We've got Cindy, Mike. We've got Alan, who asked an awesome question. Christine, you're the best. You are the best, and you know it. We had a couple. Curtis, welcome. Welcome back. I haven't talked to you in a while. And good old Scott. We have a lot of people from the Okanagan here, Calvin. So don't be surprised if your phone's ringing from like 250 and 778 numbers, okay?
All right, I'll keep my eyes open. That
All
sounds
right,
good.
buddy. Thanks again.
Okay.
Thank
Bye,
you
See you
guys.
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 Thank you,
Take care.
Enjoy your
Calvin.
night. Absolutely. Thank you,
Bye.
Christine.